Hey everyone, how's it going? This is Richard and welcome back to another stock market outlook video sponsored by MarketSmith. As always, we're going to run through the major indexes, talk about their action. We'll also highlight some key stocks to watch next week and go through the mega caps. And if at any time you do enjoy my analysis and find it helpful, please go ahead and leave a like down below. It just takes a few seconds. It's completely free. And of course, subscribe if you want to see more videos just like this one every single weekend, as well as tutorials and interviews with top traders and investors. With that said, let's dive right in with the NASDAQ composite. And first things first, we're in the midst of a potential tradable rally. We had a huge reversal after the CPI reading on this day, the 13th, I believe. And from that point on, we've just been forming short-term higher highs and higher lows, obviously ignoring this action, just looking at this progression here over the past 2 weeks. You can see first potential, significant low, then one higher low, and then most recently on Friday, after the negative reversal on Thursday, we had a strong expectation breaker on Friday and reversed quite strongly higher, forming another potential higher low. It's easy to see on a 65-minute chart. We'll highlight those lows again, and there you go. So right now in the short term, we're in the midst of a rally. As I mentioned, we're back above a rising 21 EMA. The 50 SMA is looming large right above, and that also lines up with potential resistance right here. So we'll see how the market reacts to that next week. And we're still below declining 200-day moving average. So the longer term outlook hasn't really changed. The longer term trend is still down. We're still in a bear market, but we're potentially forming something that's tradable for more aggressive short-term traders. And we'll just have to see what happens and how leadership develops as well, because it's not just all about the market indexes. It's more about the leadership stocks and the quality of that leadership. And these indexes are kind of dominated by those mega cap names. So sometimes they give a little bit of a misleading picture about what's actually going on in the market. We kind of saw that after hours where Amazon was down huge, Microsoft was down huge, but individual stocks in the leading sectors and industry groups like biotech, those acted quite well, oil and gas names as well. So you always want to kind of take a step back, look at the market indexes, but also run your screens, look for the stocks that are outperforming and are above their moving averages when the market is below. So that's a quick run through of the NASDAQ composite. And we'll just have to see if this trend of higher highs and higher lows progresses. And I think this is a very key spot right here at this prior pivot because you've got the 50 SMA coming down as well. Watch for rejection at that level. We've seen that a few times on the SPY, especially this year. So if we can finally push through that level and then that 50 SMA kind of curls up under price, that would be extremely constructive and could indicate that we're in the midst of a more kind of significant rally. So with the NASDAQ covered, let's move on over to the S&P 500. Looks very similar, but a little bit stronger. The NASDAQ has actually been lagging recently, and you can see we've pushed through that intermediate pivot that the NASDAQ is potentially running into, and we're above the 50 SMA, although it is still declining. So once again, I'd love to see this kind of slope, lessen, become flatter, and then eventually curl up under price as we continue to make higher highs and higher lows and move towards that 200 SMA, which is still declining. So when that happens, it would definitely be a positive sign, but we continue to make higher highs and higher lows in the very short term. And this overall index, as I mentioned, has been stronger than the NASDAQ. Looking at the IWM, this gives a good indication of what kind of smaller caps are doing. And you can see we barely undercut this level, big reversal on that 13th. And we're back above that 50 SMA. The 21 EMA is curling up sharply. That's a great sign. And we're about to run into that 200 SMA. So once again, this is a significant area of interest, and we'll have to see how the market reacts. I'd love to see some consolidation near that level and then a burst through on an increase in volume. Looking at the IWO, which is kind of small cap growth in particular, we're above that 50 SMA. The 21 EMA is also curling up under price. We held above these prior lows, which is a interesting divergence that shows you kind of small cap growth is outperforming those kind of bigger caps, as I mentioned. And once again, we'll have to see how we act right near that 200 SMA. But good sign so far from this index and good volume on Friday on that reversal, finding support at that 50 SMA, which is still declining. So we'll just have to see what happens. From this point on, we are still in a longer term downtrend. Looking at the FFTY, this gives you another picture of kind of how growth is performing. It's gotten absolutely destroyed. But short term forming higher highs and higher lows in the very short term, still below a declining 50 SMA. So we'll see how we act at that key level, but nice upside reversal on Friday. Lastly, we've got the ARK flagship fund. This looks very similar to the FFTY, below that 50 SMA, back above the 21 EMA, and below a longer term declining 200-day moving average. So in terms of the indexes, definitely constructive action recently, but we are potentially running into some key levels that you should be aware of. And once again, it's really important to not just take a look at the market indexes, but at the individual stocks themselves and the leadership stocks, and of course, keep track of what's actually going on in your portfolio. Moving on to the mega caps, let's take a look at Tesla. Nice undercut and rally potentially starting on this day, which I believe, that was the 21st of October. Nice action since then. Nice hammer candle after undercutting that key level. Nice upside reversal on Friday as well. We're right at that 21 EMA, so we'll see if we can burst through that key level as well as the confluence of this prior pivot. And if we can kind of make something happen and get back towards that 50 SMA and 200 SMA. Moving on to Amazon, you can see we had that gap down on the 28th, down 6.8% at the close. It was down much bigger pre-market, I think about 20% in the after hours after reported, but it remains in a longer term downtrend and short term because we're below declining 21, 50, and 200 SMA. Not really a stock I'm interested in owning just because it's not showing that strength. But it is, a big mover in the indexes themselves. So that's why it's important to keep track of this name. Moving on to another mega cap, we've got Apple, which kind of saved the market, as people were saying. A big reversal on the 13th, acting a lot better than Amazon. And you can see that after this negative close, we bounced right back after earnings. And it looks like we had a little bit of an earnings surprise, nothing crazy here, 1.57%, but very strong action running through the 50 SMA and right into the 200 SMA. So I'd love to see some consolidation, pullback, and then kind of a resumption upwards, reconfirming the strength, getting through that 200 SMA. That would be constructive. Taking a look at the weekly, you can see we've basically been consolidating for quite some time now, really since that 2020 run. So I'd love to see us kind of break through this structure and continue to make new all-time highs. Obviously, we're not there yet, but definitely constructive action after earnings. Moving on to Netflix. This has been acting quite well. We had the gap up on earnings. This has been showing relative strength for quite some time now, a few months, as I pointed out multiple times during these reviews. And we're just kind of trending higher and now running into that 300 level. So that's a kind of psychological level to be aware of. Wouldn't mind to see some consolidation back and fill into the 200 SMA, let that 21 EMA kind of catch up to price, and then resume upwards, ideally forming a little bit of a price shelf here and pushing through that 300 level. We are kind of getting closer to the bottom of this gap. So once again, that will be an area of interest, and we'll have to see how the stock deals with that level in the markets. Moving on to Facebook, let's bring up Meta. You can see, once again, a big gap down 24%. This is definitely the weakest of the big caps as of this moment. We're at that key 100 level. And yeah, I'm just not interested in this stock at all to own to the long side, below all the key moving averages and huge gap downs. And it really seems like this mega cap in particular has lost some steam. So we'll have to see what happens, but this needs a lengthy basing process to form, out of stage 1, and then potentially later on it can form a stage 2. But right now, just looking at the weekly chart, we're in a stage 4 downtrend and kind of a textbook one at that, undercutting all these key levels. So you can see the slowdown in the fundamentals. You can see how the price action actually led that, which is kind of interesting. And you've got a lot of funds owning this that might need to line up on their positions, given kind of the change in direction of the company and change in focus. So that is Meta. Last up, we've got Google. And this is also in a stage 4 downtrend, bringing up the daily chart below the key moving averages. Big upside reversal on Friday. So nothing much to do here. It's in a short-term and longer-term downtrend. And we'll just have to see what happens with this stock. But as I said before, there's a lot of individual names in biotech and oil and gas, even some software names that are forming higher lows. They're above their key moving averages. And if you're going to the long side, you want to focus on those best stocks in the best sectors, in the best industry groups, and focus on strength. And right now, these mega caps just don't have that. So that's pretty much a quick run through of those mega caps. And I do want to just quickly highlight some of the stocks that were on my longer term weekly list here. A lot of the big cap biotech names have continued to run. We had a nice breakout through this pivot here. Amgen also bringing that up, had a really nice move. You can see we had a gap up through that pivot. So this is definitely an area in terms of mega caps, more institutional quality names that if you're interested in, this has been acting well and acting a lot stronger than big cap tech. Let's see if there's any others that I really wanted to highlight. We had some nice movement in some oil and gas names, but then they did pull back on Friday. So we'll have to see how they act. There's actually a few on my watch list this week, which I'll be posting later today, that are setting up, potential pivots. And we'll just have to see how they set up, if they can consolidate and then break out once again. But overall, that's a quick run through of the market indexes, key stocks to watch. Generally, my thoughts are we're in a tradable rally. We'll have to see what happens. A really nice action on Friday, kind of an expectation breaker after the negative close on Thursday. Apple really did kind of save the market. So let me know your thoughts down below in the comment section. And if you did enjoy this video, please go ahead and take the time to leave me a like down below. And give me a shout in the comments if you stayed all the way until the end. I really appreciate you. With that, have a great rest of your weekend, and I'll see you guys in future videos. Take care.